Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Santa Rally, rest in peace. It's all over. It's tough. I know. I'm struggling too. It's been a very difficult week, really. Let's talk about the Santa Rally, where we go from now, the end of 2024, going into 2025, and what it feels like today to be an investor. It's tough. It requires patience and discipline. And that's where the tough get going. It's hard, I know. I'm struggling right now. I will be honest with you. I am struggling. It's hard to motivate yourself, hard to stay on the course, hard to do the right thing. I feel it myself. I'm fully invested. I'm struggling at the moment. It's difficult. Many of my viewers over the last 2 years who have joined have only ever seen a bull market going up all the time. Many stocks with no real value taking off. We've seen it. However, many of my viewers, most of my viewers, have not been through a bear market yet. They see the odd down day and they think it's okay. It's all part of it. It'll be up again tomorrow, don't worry. They've not experienced what it feels like to be going sideways or down for weeks or months. It can actually happen. And I've seen it. I've been witness to it. When I first started trading, I lost $30,000. I know what it feels like. Has the bull market come to an end? What comes next? And now what we do now is how we define the future of our investing strategy. Let's talk about it live on the show. Smash the like button if you like this content. Really would appreciate it. There you go. And consider subscribing and make sure that you ring the bell so you don't miss the notifications when I go live. Very, very important to do that. If you're not familiar exactly what I mean by that, let me show you this. When you click subscribe, just make sure that you've tapped the bell and it's fully applied. If you get too many notifications on YouTube, you can turn others off and you can personalize different channels. That way you don't miss anything and you'll be fully informed of when I go live and bring you news flashes and breaking news. Now then, over the last 2 years, it's been a fantastic run on the stock market. It's been a fantastic run on the S&P 500, 2 fantastic record-breaking years. Everything in the investment almanac suggested that we would have a Santa Rally. It also suggested we would have a Santa Rally last year. That didn't materialize either. Things that we are used to are not always guarantees of what we're going to get in the future. It's why we cannot just rely on charts alone, because they simply predict the possibility of what might happen compared to what happened in the past. We're going to cover some main stories this morning, and we're going to talk about where we go from here. I'm making a live video out of this actual live stream right now, so please bear with me as I do things slightly differently this morning. We're going to talk about this, the NASDAQ, S&P, Dow futures rise after choppy start for 2025. S&P 500 return on first trading day of a poor year barometer for annual performance. However, Apple, a big part of the S&P, has some good news, and things aren't always great in Tesla at the moment. Tesla China sales hit record high, however, in December. Not all bad for Tesla. Maybe at home here they are, but in China, not so bad at all. We're going to talk about all of that. Now then, I've been saying, and I predicted, a Santa Rally. The Santa Rally was poised to perform, but never quite delivered. However, we have to remind ourselves of the run we went on over the last 3 months. It only shows 5.56. Well, I've not sold anything. I've not done options. I've not shorted anything. 5% in 3 months. It's not great, but it's a lot better than if the money had been in the bank. And more importantly, it allowed me to accumulate a lot more. Remember, I've now got invested $250,000. Remember, I started with 5,000. 98 is my value. That's dropped because I took 8,000 out and put it on my Roth. 110, margin 783, and the total there you can see is, if you add them all together, 209 plus the 34.9. You can see we're just touching $250,000. This investment strategy, investment journey is not about what your balance is today. It's about how many shares you've got, how much of the slice of the pie you've got of those businesses. Because when things are down and when things are going sideways, it's tough. But that's when the real investors come into the ring and start buying. The lemmings wait for everything to go up and then they jump in. Or so it's said. Not always the case. Let me explain that for a moment. There are many people sat on the sidelines now looking at other options, other things to do, and where to put their money. If you are at the end of your financial journey and you've made your money, you don't risk your money. You don't play with your money at all. That is for the retail investor who's scrambling around to get the whole thing started. The real money doesn't enter the market until it knows it's going to go up. And people know that people are very wary at the moment of tariffs, concerns with Tesla, Elon Musk, Donald Trump. What's the Fed going to do? Santa rally never appeared 2 years in a row. Are we going to get interest rates coming up again? All of these things. None of these things are a concern for me at all. A lot of noise and bluster. As we always know, the markets overreact upwards and they overreact going down. It's always the case, always has been. It's how it works. However, that presents opportunity for me, an investor, not a gambler, an investor. But unfortunately, some of the really big money sits on the sidelines expecting to come in for the Santa rally, and they never did. They never did because they're concerned and they're worried. They're not me. They're not in between. They're not retail investors just starting out with $50. They are people with billions of dollars of cash waiting for a certainty. And there's nothing in this life that's certain. But right now, why put your money here when there are other options which can guarantee you bonds, for example, fixed income assets, and so on and so forth. So at the moment, money is tough to come in. Tom Lee said we would triple the S&P by the end of the decade. My portfolio, I also believe that, and I still believe that. However, time in the market will always beat and outperform timing the market. Some of the lemmings that suddenly will jump on board when everything goes up and start telling us they knew the markets were rubbish and they knew all this. They didn't, but they will announce it the moment they come back in and after it's gone sideways for a while. But remember, I also said the S&P would go sideways 5 to 10%, no more next year. That's why I've been buying Coca-Cola. As you know, that is my defensive position. There's my Coca-Cola, and I just bought a lot more. You all remember that. There is my Coca-Cola with now 559 shares. All of my money is in Coca-Cola. You can see there, 99.98. So I also believe the S&P has got a little bit of a stall lined up for it because of the uncertainty. However, it's still the place I want all of my money in my brokerage account long term, and that's why I keep buying the dips. But it's difficult right now. I am struggling. It's very hard to get out of bed and be upbeat and positive when you've got $250,000 invested, huge amounts of margin, and you're just sitting there watching the thing go sideways. And over the last few days, we've seen it just go down and down when we're expecting a Santa rally. It's tough, but this is the moment I define my portfolio for the future. This is the moment I will decide whether I get to my $1 million or not. Now, you may remember last year when I decided to rebalance my portfolio on purpose, lost over $30,000. I sold out of everything at the worst time possible, really, but it was the right thing to do for the show. We're coming up to that anniversary. That is 1 week away. 1 week from a year ago, if you look at my 1 year, see that big drop there? See that there? I sold it all on the 18th of January. Then I was all in on the S&P, and then we rallied and rallied and rallied all the way through. We had all the macro dips and the macro conditions and interest scares and so on and so forth. But that was the moment I lost $30,000. Boom. Not just on this account, overall. Okay. And I started. So my year really starts on the 18th of January. That's the anniversary. Now, I'm not going to make that mistake again. Well, it wasn't a mistake. It was intentional. It was the right thing to do for the show. However, there's also some sentiment there. That was frustration and disappointment and so on. But I've grown since then. The portfolio is now built upon solid, long-lasting principles. The channel is growing. My engine is growing because I've got an income now. I had no income back a year and a half, 2 years ago. Now I do. Now I've got $250,000 invested. Now I look at things differently. And now it's time to consistently get it right. And over the last 12 months, just less a few days, I've done 19 trades, 19 wins. I never lose money, and I'm always doing the right thing for me and the show. So this is the moment I decide, what do I do? Do I get sick and tired of all this? This is really frustrating, having all this margin, having all this investment all tied up. Why don't I buy Gorilla? Why don't I buy Mobix? Things that I correctly, TPL, correctly, months ahead identified. How did I identify it? By doing interviews with CEOs. By taking part in earnings calls, by covering all the FOMC reports. I was right. I was consistently right on finding great assets to buy. Why don't I do that? If I do what I'm telling everyone else to do, I would be up hundreds of percent right now. Absolutely hundreds of percent. However, number one, it would not be right for the integrity of the show because I would now be a pump and dumper because I would be pumping stocks that I own and the integrity of the show would be lost. And that's the base value of how I earn my money, and that would all be lost. But also my long-term goal of just buying and holding and never selling would be shot because you'd have to sell and take profits from those assets. And of course, then I would pay tax and the whole strategy would change. So I'm not going to do that. However, I know it's difficult. I know it's hard, and it's hard for everyone right now. No one has got a special portfolio and a special access to the stock market, which is different than everybody else. If you are an individual stock purchaser and you've bought Gorilla or you bought TPL or you bought Mobix when we identified it, you're up 100% and you're the king of the world. And we hope you are. We brought those to you and we hope you are. Just make sure you've kept your money to one side to pay the tax at the end of the year because you will be taxed on those gains. However, if you're not buying individual stocks and you are just holding, doing the right thing for the long term, remember, long-term investors will always win at the end of the day, but you do go through pain and frustration, and it's like, God, why don't I just buy this? Why don't I just buy Binky Bonk? Why don't I just buy, Bitcoin? Well, majority of those trades will not come off. And even if they did come off, the next one probably won't. And you've got to pay tax and so on and so forth. Being a long-term investor is designed from its very definition of being a long-time investment, and it can be painful and be boring. We've only got another 6 months to go, and we will enter a bear market for a while. We've had 2 good years and a bear market. Now, what does that mean? When we get a bear market, when we finally get the bear market, the markets are going to go sideways for a while. That will be a time for me then to simply just keep paying down margin, No more buying, no point. It's not going up. I'm not selling. I'm never selling until I need to retire. I'm not buying because it's not really getting any cheaper. We're just paying down margin. My strategy of selling Coca-Cola, I have to wait until March. I know what I want to do. I've got to wait until March, take my dividends, take the profit, buy the S&P because it's not going to have gone up that much, get the dividends for S&P and back in there. Long-term strategy. But every day when you get up in the morning, over the last 2 years, pretty much every single day, I've seen my portfolio up every day, just about every day. Not every single day, but maybe 90% of the time. Now, we're going to have to start getting used to it being down or sideways. That is when the real investors stay the game. Many YouTube channels will fade away again. YouTube channels, I see it all the time, get born on bull markets, get born and created when the market's going up, rubbling around, scrambling around to try to find an audience. They start disappearing. The statistics are quite clear. I study them every day. They start fading away when things start going sideways and downwards because it's tough. Investors give up. Right now, investors with big money are sat on the sidelines, waiting to come in. They're not coming in either. They're waiting. It gets a little bit tough to be in this business right now. It's tough for me. What do I talk about every day? How do I keep everybody energized? How do I keep everybody focused? How do I keep myself focused when all the news is like, waiting, depression, frustrating? Where do we go from here? So let's talk about the news. And I hope you've enjoyed and got something out of my message. But just know that I am with you every step of the way. This is difficult. It's hard. But investing and turning $5,000, building a YouTube channel into $1 million was never going to be easy. It was going to require lots of commitment, lots of work. And that is what I promise to you and to myself. The news today, let's cover it. NASDAQ, S&P, Dow futures rise after choppy start to 2025. Yes, it was a difficult start, of course, also plagued with very sad news of what happened in New Orleans. Stock index futures were higher on Friday, a day after Wall Street kicked off 2025 with a choppy first trading session. S&P 500 up 0.3, NASDAQ 100 up 0.5, and Dow up 0.1. The 10-year Treasury yield fell 2 basis points to 4.55. The 2-year yield fell 2 basis points to 4.24. US stocks on Thursday experienced a choppy first trading session of 2025 in which they initially jumped and then seesawed and finally ended up negative again. Wall Street is now on a 5-day losing streak. Remember, just before the dawn and the sunshine, we have the final storm. The last thing you want to do is sell off now if all your macro conditions and principles and analysis and study and time are still intact, and they are. 75% of the S&P beat on earnings. Interest rates are coming down. We're still in a bull market. Everything would suggest things are okay. This is not the time to sell out. The first trading day has been very poor, has been a very poor guide to the rest of the year in recent times. So we wouldn't extrapolate things too far. Very important that. Deutsche Bank's Henry Allen said. I'll repeat that. The first trading day has been a very poor guide to the rest of the year. So the first day is not defining the year. Do not give up because the first day disappointed. For US equities, there was a much more negative story, with the S&P 500 posting a 5th consecutive loss. A lot of profit taking, a lot of tax harvesting, driven by even deeper losses for the Magnificent Seven. On the economic side, the December ISM manufacturing index is forecasted to land during market hours. We'll be watching that. That actually might be out. Actually, I'll come back to that in a minute. The economists, on an average, expect it to come in at 48.2. A US business sentiment survey is due. Partisan bias gives upside risks. UBS Paul Donovan said. There are a couple of Federal Reserve speakers also lined up today, and we'll be paying some attention to that. All right, let's move on. The S&P 500's returns on the first trading day of a year, poor barometer for annual performance. We cannot take the first day as a guide, as we just discovered there a few moments ago. Wall Street suffered a choppy first trading day of 2025 on Thursday, eventually ending up in the red, but investors need not fret, as history shows that the benchmark, the S&P 500 performance on the first trading day of the year, is a poor benchmark for the gauge's eventual annual return. In this century, the S&P 500 returns on the first trading day of the year has matched its eventual annual performance in 13 instances, while differing in 12. Notably, the last 4 years in a row have seen a discrepancy in the S&P 500's performance on the first trading day versus its eventual annual return. Market participants are still anticipating another positive year for equities in 2025. Though after delivering back-to-back years of plus 20% gains for the first time since 1998, some of the momentum is expected to ease. Absolutely. Just because we've had 2 good years doesn't mean it's going to continue. More likely, like I say, go 5 to 10%, but we still want to be in there accumulating for the next run. So it's just a time to build and sit on our profits, let it percolate, if you like, pay down margin and all the rest of it. Market participants are still anticipating a positive year for equities 2025, although after delivering back-to-back of 20% gains for the first time since 1998, some of the momentum is expected to ease up. There remains uncertainty over incoming President Donald Trump's policies and the future path of monetary policy. Of course it does. With the threats of tariffs, it's concerning everybody, but it's not going to be a concern. It's just starting the year wobbly. Does this week's stock market behavior provide clues to the rest of the year? Probably not. David Morrison, senior market analyst at Trade Nation, said, "It's fair to assume that much of the recent volatility and downside pressure comes as a result of year-end window dressing and fund rebalancing." Absolutely. As managers shift their holdings between equities and bonds. But remember, at some point, they'll be back. You want to be in when they're away, because when they take their money and the market goes down and sideways, you accumulate. When they decide the real money, the big money, who doesn't risk its money, comes back, you're already in. You win. You can't lose by simply holding the course, and it's difficult. This became necessary due to weakness in the bond market since mid-September. Ironically, just after the Fed slashed rates by 50 basis points, contrasting with strength across equities going back to October 2023, Morrison said. Now going to take a little bit of a look at this. One of the biggest parts of the S&P, some good news, and then we'll show you something else with Tesla. Apple Fitness Plus unveils new lineup collaboration with Strava. This is good because, as we know, that Apple is a stock to own, not to trade. I agree with Jim Cramer on this one. I don't agree with him on most things, but I do agree with him on this one. Friday unveiled new features for its Fitness Plus streaming workout service, offering new programs for strength, pickleball, yoga, and breath meditation, and a new collaboration with Strava. We're not going to go on much about this, but I just wanted to mention that one of the most prominent parts of the S&P has got some good news today, and we do expect good news going forward. But I want to mention Tesla, because we've been looking at Tesla recently and we've been noticing, because of bad numbers, we had a big drop. So let me bring this on the screen and then show you some other news in contrast to that to give balance. Because even though we do like Tesla, we have always said it's extremely volatile. I wouldn't buy it as an individual stock. It's way too volatile. Look at this, 16.27 down in a week. But it's not all bad for Tesla. This is news just out. It came out at the making of this video. When I made this video in the early, it's 8 o'clock in the morning here, Central Time. This came out at 4 a.m. So it's only been out 4 hours. No one has digested it yet. But the market is down on Tesla, and it's still pretty flat this morning, pre-market. What is the news? This, and it will filter through in the next hour or so. Tesla China sales hit record high level in December. So not all doom and gloom for Tesla, right? Okay. Though Tesla's global deliveries slipped in 2024, sales in China mustered up despite ongoing price wars and stiff competition. from homegrown brands like BYD, NIO, and others. Tesla car sales in China were up 12.8% month over month in December to a record high of 83,000 units, citing Tesla China. Overall, in 2024, Tesla sold 657,000 units in China, up 8% year over year. And by contrast, its global deliveries in 24 were down 1.1 from 2023. And we can see that really the market hasn't digested this news yet. It's very, very early. So let's come full circle and wrap up this live event that I'm doing, which will be a video later. It's tough. I feel it's tough. It's hard. It's like, oh, this is really, really difficult. Trying to be motivated, get up in the morning. I've been doing this now for coming up to 4 years. Every single trading day. I've only had one holiday in that entire time, which was October. I'm always here. I'm never going anywhere. I won't go anywhere. I won't be giving up on the bear market, but the bear market will be here. The bear market will return sometime later in the autumn of 2025. But we've got some good action between now and then. This is not a time to buy the market. It's a time to already be in the market. We want to just remain in. It's going to go sideways. It's difficult, I know, but this is how we define what investing is all about. As you saw from the news there, it's not a gauge of the rest of the year by the first day. It all makes sense, but overall, the macro conditions, the economy, the reason to be an investor are still intact. However, money on the sidelines isn't really looking for an opportunity to buy at the moment. So if you're already in, it might not be that exciting for a while. But when the bear market comes and it starts going down, eventually, remember, bear markets last a lot less than bull markets. Bull markets historically last a lot longer than bear markets. So when the bear market returns, and it will, sometime in the autumn, in the winter of 2025, it will. Markets will start going down. That won't bother me because I'm not buying it into the bear market. I'm already in. I bought the dips in December, at the end of December. Now I'm just remaining in with $250,000. When the bear market hits and it starts going down, the big money will eventually discover and decide, okay, now it's oversold. Now I'm jumping back in again. I don't want to be that person. I want to be here to collect all of their money. Because remember, as an investor, if you're already in and you're holding and you're waiting, and then everybody then decides to join you, they're giving you their money. I like that because as they jump in, your stocks go up. And they also provide great levels of support because they're now buying. They don't want to sell until we get a good return, right? You, on the other hand, are already winning and already up, and you are in a nice position. And what that's doing is providing another level of support, another padlock on the safe, tying your money up and making it safe that it's not going to dip from here. And if you look at the S&P over time, that's how it always performs, how it always will perform. Because when money returns and starts buying en masse, it sets levels that never get broken. We have these huge dips and drops all through history, but they keep resetting and then setting future all-time highs. Always works that way. It's never the wrong time to invest. The best time, as the Chinese say, was 20 years ago. If not, today. Stay in, do nothing, go sideways, leave the seeds in the ground, and you'll be great by the time you need your money in the future. There's my outlook for 2025. Click above my head for all the links. Down below in the description, over here and down here, I'll put more videos that hopefully you will find useful. Until next time, as always, take care of yourselves and each other.